Okay, hello everyone and welcome back again. It is July 5th. Happy Independence Day to our viewers from the US. So it's a market holiday and the markets are not open. But nonetheless, the work of looking for potential trades continue. So in the last portfolio review video, I mentioned that I would cover TSM this week. It's a company that I've been selling put options on, and so I just want to do a quick video to explore this particular trade. So TSM, many of you would know, TSMC is a Taiwanese company. It is one of the largest manufacturers of semiconductors. If you don't know what a semiconductor is, it looks basically like this. I'm sure if you have taken apart a computer or a cell phone, you would have seen something that looks like this. It's basically the crucial component of any electronic device. Your computers, your cell phones, your onboard computers in your cars, your smartwatches, they all run on semiconductors. A lot of news recently about semiconductor shortages, and as the importance of technology becomes more and more crucial in our everyday lives. Even if you think about how with the pandemic, most of us probably know we can't conduct our meetings physically, and we have to conduct meetings digitally. Schools have to conduct learning digitally. And even before the pandemic, there has been a shift of how the next generation needs to be educated in what's going to drive and move the world in the future. In my generation, when I was in school, we learned on chalkboards. We learned on using pencils and papers, and these days kids are learning with computers and iPads. Just a general understanding of how things are in the world today, you kind of get a sense of where this industry is going to go. So TSM manufactures these semiconductor chips for many different companies. Notable ones are like Apple's M1 chip. They also manufacture chips for AMD, for Intel, for Nvidia's graphic cards. If we take a look at market share, TSM basically is more than 50% of the market share. I think what this shows us is that TSM is definitely a dominant player in the semiconductor manufacturing industry. Okay, so with that in mind, let's take a look at the financial data. So we come over to our Morningstar platform and go over to full key ratios data. So again, the same factors that I look out for. Revenue is positive, and well, as we can see, it's very clearly increasing. Net income and earnings per share likewise have been increasing over the years. Operating cash flow, very positive and very, very much increasing. Same thing for free cash flow. We come down into our profitability section. We see the net margin, which I was talking about how I look for something that's 10. This is three to four times of what I look for. Interest coverage, you can see that their earnings far outweigh the interest payments they need to make, and that is because when we come over to financial health, the debt to equity ratio of this company is negligible. Under the valuation tab, based on PE ratios compared with the last 5-year average, we can see that it is actually overvalued. But I wouldn't say that is unexpected. I'm sure the whole investment community knows that this company is the dominant player in the sector. But even in spite of that, I still think that there's still opportunities to make some returns on this particular investment. And therefore, we go over to the chart to study that further. So this is the chart of TSM, and this is just containing the data from the last 1 year. If we zoom out further, we can see that this uptrend has been ongoing for many years, at least in the last 10 years. For the most part, from July last year until sometime in Feb this year, it was pretty much on a straight uptrend. And then along with the rest of the market in the growth and the tech space, there was a correction, and TSM corrected about 20%. And right now we are sort of like in this consolidation kind of phase where you can see a very strong support line over here and a strong support line somewhere over here. Oops. And basically it's just kind of like stuck in this particular range for some time. What I've been doing is I've been shorting put options on this particular stock. I want to acquire shares in TSM, and I may not want to acquire them at these current prices, but based on taking a look at the how strong the financials and the fundamentals of this company is, from a very long-term play perspective, I am fairly confident that in the long run, this stock will continue to increase in the long run. So by selling put options, I can reduce the cost basis of my entries, and I can get paid essentially to wait for the stock to come down to a more favorable price. I've been selling put options that are 2 strikes out of the money for some time, but if we just take a look at the positions that I started since the beginning of June, the first position I took on 2nd of June was to sell a put option at a strike price of 117, and I sold that for $100. So I was able to exit this position without being assigned. On June 11, I entered another put option with a strike price of $116. Also about 2 weeks to expiration, I collected a premium of $150. And also this position was not assigned. So on June 25th, I sold another put option with a strike price of $116, 7 days to expiration. And for this, I collected $80 in premiums. That again was not assigned. And in the recent portfolio review last week, I just entered another TSM short put at $117 for $70 in premiums. I've collected in total $400 worth of premiums. In the event that on Friday's market session, TSM falls significantly below my strike price of $117, basically I would have to buy 100 shares of stock at $117. Because I've collected $400 worth in premiums, I basically would be buying the 100 shares of stock at $113. And if you look back at the chart, that would be somewhere close to where the long-term 144 exponential moving average is. So I think that's still a fairly good support line to be buying shares in this company. So I wouldn't mind being assigned on this particular position. I think that's a key thing about selling cash covered puts. You don't want to be selling cash covered puts on stocks that you don't believe will increase in the long term. You don't want to be selling cash covered puts on stocks that you don't actually want to be assigned positions in. And most importantly, you need, very importantly, to make sure that you have enough capital in your account in case these positions are assigned. You don't want to be in a situation where you don't have enough capital and you end up having to take leverage or having your positions liquidated, because then you will be making a loss. A short put that goes in the money It's only a loss-making position if you have no intention of picking up the underlying. But if you have every intention of picking up the underlying, you wouldn't see that as a loss-making position because you are literally buying the shares at a much cheaper price. And if it's a good company, you can expect that these shares will most likely increase in the long run. So thanks for watching this video on TSM. We shall see how this trade plays out. I will update again at the weekly portfolio review video.